Hello, good evening, everyone. Just like speaking, and in fact, just had to tell you that I'm not actually feeling that good. I just had my vaccine shots yesterday, but my side effects. How many of you actually have vaccine shots already? My side effects weren't that bad. It's just I'm feeling the chills. That's about it. I didn't get fever. I mean, I bet there were some worse symptoms. Yeah, feverish, body aches, swollen injection site, and so on and so forth. Yeah, all I had was the chills. That's about it. I was a bit disappointed. Yeah, at least I thought I would get lethargic and had a better sleep. All right, enough about that. So today I'm going to talk about actually from trading right from the start. I was actually very attracted to some of the much more simpler strategies whereby I only need to place 1 or 2 trades a day, looking at a single chart. Yeah. So some of the more pronounced way to do it is people would say, like, just trade the London break sessions. Just trade the London sessions. Yeah, so you can go for a break of certain ranges. Yeah, or trading within the ranges of the London session. Yeah. So what are the range definition and all this? Then everyone to his own. Then of course, if you have the London break, then naturally you also have the Asia break. You also have the US break, so on and so forth. Yeah. So this idea actually just sort of crept into my mind a couple of weeks back. So I decided to play around with indicators and see how it looks like. I'm gonna admit to you that the result actually weren't fantastic. Yeah. I mean, it was still profitable at the end, but I think it was one of the worst results that I've had. In a sense that it is still profitable, just that I don't think from a trading perspective I would actually be interested in it. Now, there can be, of course, multiple reasons why I didn't get a favorable results. Chief of them all could also be my risk management was kind of wide. I would actually agree with that. Yeah, this time around I decided to approach a rather wide risk management. Yeah. So anyway, which is the screen I'm sharing. So without further ado, nope, not this. Yeah. So I actually wait a minute. What should it be? Yeah, the indicator that you all should be downloading from the YouTube link is called the channel breakout. So it is the same link, always will be the same link. So yeah, so just go search for this link, channel breakout candles. These are my settings. I've also put it in the Google Sheet ready, so feel free to view it and then copy the settings if you want. Yeah. So now I'm gonna explain to you why some of the definition behind it. So what are some of the settings, or why I rather choose these settings? 200 hours is really in my Singapore time is about 7 a.m. Yeah. So since the server starts at 5, I choose 7 is because that would mean the Japanese market is already in. Yeah, they're starting to wake up. I think they will open at 7. Yeah, so I don't want to just trade the Aussie and the Kiwi market. Yeah, their liquidity is actually not enough. Yeah, in Asia, the 2 largest trading houses, actually Singapore and JPY, the Japanese market. Yeah, surprisingly, Singapore is actually one of the largest trading house. Actually, not that surprised, considering that we are one of the financial powerhouse. Yeah, so that's the reason why I choose 2. Then, of course, the ending time of this range is being, I put it as 10. So really, in Singapore hours, it's actually 3 p.m. Yeah. So the range is defined by between 7 a.m. to 3 p.m. So at 10, whatever price is in, we'll call it the Asia range. So once, look, this will be a better example. As you can see that on my cursor looks like all the way below is 900 hours. Then at 100 hours, if it does break out of the range, then we'll consider it tradable. Yeah. So the rules are quite simple. Yeah. So once price break out of the Asia range, we immediately place a buy entry or a sell entry. Yeah. So 1 day, 1 trade only. And then my stop loss is actually at the middle of it. That's about it. Rather simple way. This indicator does not repaint. So I take the first available entries and that's it. Then the testing is done for the day. Yeah. So the date range which I've tested is actually from the 1st of March this year to end of June. Yeah. So I got 3 months of good data. Yeah. Since there's 1 trade per day, altogether, I didn't test a lot of pairs. Yeah, I test the major, obviously Euro USD, Aussie dollar, dollar yen. So these three pair actually represents the, I would say euro dollar is the major, the largest volume, so it should be tested no matter what. Yeah, Aussie dollar is because it's most active during the Asia, so I might as well just test it. Dollar yen, of course, it has the components of USD and JPY. Then during the London, it should be equally active. Pound yen, dragon, there's no as dragon pair, definitely should be tested because since we're doing the London range, London breakout, and then the FTSE 100. Yeah, what's the London breakout if I don't test the, what do you call it, the index, the FTSE index, right? So these are the results I get. Yeah. So if within the breakout I get a 5-hour win, I would consider that as the ultimate. I mean, no, in my years of trading, I don't usually see people going on for 5R. Yeah, so this is a bit ridiculous, but nevertheless, I should still aim for it because a breakout can actually get you 5R quite easily if traded right. So all in all, this is how I did the testing. Then of course, just using this as example, this is a breakout candle, immediately market entry, stop loss right at the top, not at the top, at the center. And then if price get 5R, I will register as a 5R win. Pretty straightforward. And then this is a breakout candle, stop loss at the middle. So I won't have a fixed take profit unless price hits 5R. So at the end of the day, all right, so this is where prices, I'll set an imaginary TP at the next level, and the stop loss will be shifted to the nearest reward level. So in this case, it will be 1R. So depending price hits the 1R or 2R, then I'll register that as a 1R or 2R win. So in this case, price will be a 1R win. Yeah. So hope that's clear. I'll just go through a couple more examples. Breakout candle, stop loss here. So as you can see, this time around, price didn't even go beyond 1R. So my stop loss won't be, my stop loss will actually be shifted to entry. That's about it. And then the take profit level will actually be at 1R itself. Since price retraced to entry, this is known as a break-even trade. Again, next example. So at the end of the day, you can see that price closed above just above the entry. So stop loss shifted to entry, and then next take profit level will actually just be 1R. But very soon we can see that price actually hits the stop loss at entry. So this is again another break-even trade. Yeah. So this is actually how I did my testing from 1st March this year to end of June. Yeah. Not every day we actually get a breakout. There are some days that price just remains within the Asian consolidation, the Asian price range. Not often, but it does happen. So that explains why I don't have the fixed number of trades throughout all the 5 pairs that I tested. So just download this indicator and give it a try. This is not a multi-time frame indicator. I'm just using it purely on H1. Yeah. 2 weeks later, I will test it. I will present it. I'll present the findings based on the, what do you call it? London breakout, the US breakout. Yeah. So it's kind of fun to actually test this to give you a better understanding. So now you have known my methodology. So I've given you 2 examples. This is the settings which I used. Yeah, so I'll always, for this particular one, I use market entry. Stop loss is at the midline of breakout channel. That's about it. Actually, there's nothing much complications. Yeah. So Euro USD. Now this actually pretty much surprised me for Euro USD result. Let me blow it up. My screen looks kind of small. Yeah. So the Euro USD actually hits 5R win couple of times. Yeah, Euro USD in my opinion is actually known as one of the more boring pairs. Yeah. If it trends quite slowly. Usually doesn't have very volatile movement. I'm surprised it actually hit 5R wins 4 times. Yeah, you can see the others actually didn't hit as much at all. But on saying that, Euro USD actually hit quite a fair bit of stop loss. Yeah, it's in the top place, equal with FTSE. Now, but over 3 months of testing, look for these 5 pairs, I got about 359 trades. The results just aren't fantastic for me. Yeah. So I got total of 14R, 10, 10, 16, and then a negative 9 for FTSE 100. Now the thing is that over 3 months, just 5 pairs, considering that each pair give me about 10%, I would say it's okay. It's not fantastic, but at the same time, it's not that bad. But in my actual testing, what really uh, why I rated it bad is because I do get 6 to 8 continuous stop loss. Yeah. So personally, for me as a trader, if I trade a strategy which at any one pair, it can give me about 6 stop loss consecutively. So imagine if I trade it together with other pairs. That means that out of the 29 pairs, if I trade all, then there's a very, very real chance that for 3 days continuously, I will get all stop losses, and that will actually wreck my account. So any strategy that actually gives me more than 4 stop losses back to back, I don't usually like to trade it anymore. Yeah, that is quite scary. Psychologically, it's actually quite hard, quite tough to swallow. Yeah. So I hope you get what I'm putting forth. More 1 hour wins compared to 5 hour. That's definite. Then of course always a 1% loss. Couple of break evens. Yeah. So I've demonstrated to you how price sometimes can retrace back. Now on saying that, it's not a complete waste of time when I tested this strategy, because there are days. Okay. So you can see that on my chart. Let's say USD. There are days whereby price actually just waterfall. So you can see that there are days where my price actually didn't move much. It sort of break, came back and retest. Even if it moved, it actually didn't move a lot. Yeah, 30 odd pips, not nice. This kind of movement will be nice. This kind of movement will be nice. Yeah, so this kind of movement definitely will be nice. So imagine if I reach this, that'll be 17 pips, and then at the end of the day, I got 56 pips. Yeah, there are some days whereby it goes for a waterfall movement. Any of you want to actually make a guess what I don't know. I don't know what causes this, right? But in my back testing, I learned something. Okay? And any of you want to float me any idea that why on some days that price, or what are some common characteristics which cause price to actually have a waterfall movement? Yeah, I'm 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 just blankly asking you, hoping you all can give me ideas. Yeah, if the idea is viable, I might just retest this and see if it actually works. I have a few ideas of my own. I'm not entirely sure. I'm not entirely confident that it's correct. I'll share with you two of it. Up to you whether your thing is viable for you to test it yourself. Yeah. So yeah, just float me some ideas that you all might have. Personally, for me, if I can trade any strategy and look at one screen, one pair a day, I'll happily do that. If it can, on average, 1 week give me 2%, or even 1% a week for one pair, that means a month I'll usually have 4 to 5%. I'll be very happy with the strategy. Yeah, long term wise, it is a sustainable strategy, provided I don't get 5 to 6 back to back drawdown. News can be, yeah. So Gary told me news. So news can be one of the factors. That is actually one thing that I suspected. So we'll refer to Forex Factory for that. Any others that y'all want to float to me? Nothing. That's it. Just news. All right. So I'll go along with news. So what happens is that let's go to Forex Factory. So I'll have a date range, say, let's say from May 1st to current today, which is 13th, 60-day max range. Forget it. I'll just go on 33, apply settings. Then I will only want to see red news, orange news, Euro and USD. Just take it as an example. All right, so we will start from 25th onwards, 25th May. So let's see what happens. Okay, so this 25th. So what I'm interested in capturing is if I can find a way to successfully capture this kind of movement. If I can tighten the stop loss, it will be really good. So this is the non-tighten stop loss. That means my stop loss is at the middle of channel. If I do ever recommence testing, and I can have a reliable way in predicting that price might waterfall on a particular day, then my stop loss will be tightened to actually just the breakout candle itself. Yeah. So one of my suspicion, and as Gary rightly put it, is actually news. Why news? So you have already looked on the 26th, there's a breakout, a very nice breakout. So what it means is that on 26th, there's only crude oil inventories, and only on the 27th, all right, there's USD news. So it's Euro USD, so either the Euro or USD can actually affect it. Yeah. So I don't quite make sense of these numbers. Not that I really am keen to make sense of. That's more of the domain of fundamentalists. So what if I have a hypothesis that, and as you all, I think a lot of you have already heard before, for retail traders, we are the last batch of people to know about news. So what it means is that for those geniuses out there, the institutions, they would have news way beforehand. That means they would have actually priced in. So that means before news on the 27th, either 25th or 26th, it would have been priced in. That means no matter what, it's actually too late for us to get in. So the 27th, something, it may be or against the price in. That's why it caused such a waterfall movement. Yeah. So if my suspicion is that, that means if any of you who is, I can't, okay, I'm unable to do it. If any of you who has a keen reading of fundamental news, that means on if 27 there's a fundamental news which might possibly move the market. So this time around I'll just use the rate news. It's a preliminary GDP. It's worse than forecast. What does that mean? Actually, I mean usually that means USD would drop, but in this case, you can see that Euro USD actually dropped. That means USD will rise. Yeah. In essence, I don't really care about that. So what I meant is that let's say this is already priced in. People are pricing in the news. That's why it causes this sell-off. Then on the 27th, although USD had a bad news, there wasn't much movement. Does it make sense to you? Or you are lost? I just repeat again. So my suspicion, general suspicion is that on the 27th, there's an important news coming out. That means the day before or 1 or 2 days before, people are already pricing in. That means on the 26th or the 25th. That's why it's causing a sell-off or buy-in. It's all to it. So on, if you can't trade news, if this proves to be a viable way, this is purely a hypothesis. All right, I have not tested it. So if you're able to do that, I think that may be one method to approach the market. So let's look at a couple more. So how about this? June 1st, so USD, the important USD news coming out. So that means on the 31st or the 30th, there should be some great movement. Let's have a look at it. 31st, there is it. The price sort of actually does break out. It is still a respectable 2R trade at that. Then of course, news on itself, which is June 1st, even though you have better than forecasted 61.2, then you see that June 1st, there wasn't actually much movement. Is that a viable way of trading the market? I really hope some of you can actually tell me the answer. At this point, I can tell you, sincerely, I don't know. Yeah. So let's moving on to some other news. Let's say June 15th, really quite a number of USD news is coming up. So I would say 14 or 13, the market is actually pricing in. So let's have a look. June 13th or 14th. There is 11th. So yeah, there's no 13th. So this will be Friday. So you can see that Friday they're actually pricing in. Huge plunge. Then on the 14th, actually no movement. On the 15th, which is the actual news. Am I right? Yeah, on the 15th, which is actual news itself, from 8:30 to 9:15 onwards, you can see that there wasn't really any much movement per se. So can I say that? Can I make an assumption that market has already priced in? Beats me. You can see June 16th, there's a sell-off again. So I assume 17 or 18 would have important news coming up. Or actually all the way from 16 to 17 that there are news coming up. US crude oil inventories, this is more for CAD currency. I don't think it actually affects the USD much. Of course, Yellen speaking, I always hate any of the treasury staff speaking, or the, what do you call that? I forgot that term. Yeah, FOMC. That's June 17th, which is flat. The prediction is flat. So let's go for one more example. How about July 2nd? So July 2nd, oh, this is the NFP news, non-farm payroll. So my assumption is that either the June 1st or June 30th, people will start pricing in. Let's go have a look. 30th and the 1st. There you have it. So it's, yeah, 30th. So you can indeed, there's a price fall, which is a pretty good 3R or 2R, depending on where you take your profits. And then July 2nd, which is the NFP itself, huge swing, but not that any direction will give you a good risk to reward. So this is the 8. So again, credits to Gary for pointing out news. This is also my suspicion that either the day before or the 2 days before, people will start pricing in. Yeah, so I guess to a certain effect, only fundamentalists is able to make use of this particular way of trading. Even if you tell me it's good news or bad news, actually I can't tell you whether a particular pair will move. Now, the next method which I am doing, which I'm more inclined to use, is price compression. Yeah, what it means is that if during the Asian session, so let's say I arbitrarily make it that if during the Asian session price don't move more than 20 pips, so I just use Aussie dollar for this time. If price don't move more than 20 pips, that means it's really just hobbling along. Then during the London, something is bound to happen. So that's my hypothesis. Yeah. So you can define it as other pips. No need to be the same as my 20 pips. I'm just using 20 pips as I like it. Yeah. So this is about what? Yeah, 15 pips. 14, 15 pips. Price broke. So anything that is lesser than 20 pips, I might be interested to look at. But this might be applied to all currencies. So at the first break, we can trade it. So this one will give a very nice risk to reward. So ranges like this, 20 pips, not interested. It must be lesser than 20 pips. 26, not interested. Just going for really small compressions. 30 pips, not interested. How about this? 22, no. It's gonna be bigger. How about this? 30, no. You can see they actually don't happen that often, which is good in a way. Jeez. Now I want some example it doesn't want to give me. How about this? That's 17 pips. So this is 17 pips compression during Asian session, highest and lowest during Asian session, and then price actually deep broke out. Very nice break. Yeah, so probably for this way of trading, you need to put a pending order. I would say 1 or 2 pips above the range. That might work. OCO in a way. Yeah, so this is 18 pips. This will actually be triggered, so this will be stop loss. So this looks huge. 14 pips, again another stop loss. 3 stop loss. This will actually be comprised of less than 20 pips, but price will trigger up first and then it falls. 18 pips, trigger, and then will get stop loss. 4 stop loss consecutively. Doesn't really look good for me at all. Let me see if I have another. Yeah, I haven't actually done a detailed 21 pips, not nice. Yeah, all this looks huge to me. How about this? 29 pips. Yeah, it doesn't look good. Yeah, so actually primarily these are the two methods which I have a slant towards. That means there's a price compression in the Asian session, or there's an important upcoming news and people are starting to price in 1 or 2 days before. As of now, I'm more inclined to think that either of these two methods will actually work better than just trading random breakouts without any trend filter. I did this without trend filter, it's just pure breakouts. Or it is my management problem, in the sense that if any of you has watched Trading Buddies, then I do feel that the way Jeff trade slingshot management will actually work well. Yeah, because when price break, no matter whether it retraces or not, usually it will still move further by a couple of pips at least, then it will retrace back. Yeah, so a slingshot management might actually work well in this context, but slingshot is actually quite a hassle to backtest. Yeah, so that's all I can share with you all. Yeah. Hi Gary, look for 3-tier London breakout. No, actually I have a couple of breakout indicators. It's just that I do have the actual London breakout. Yeah, it's just that I decided to switch the timing around. But I've actually tested. I think this is my third time trading a London breakout. I mean the idea is the same, trading a London breakout all with the London range. All in all, I still do get favorable results. It's just that in the interior of it, I just can't digest any strategy that give me about 5 to 6 back-to-back stop loss. It's quite painful mentally. Yeah. So unless it works on a very particular pair, so usually that will actually be pound dollar, because pound dollar is pretty volatile. Euro yen, pound yen, the indices. Then if the nature of those pair, they have a certain characteristics. Yeah, so that is actually worth exploring. So yeah, that's it. That's all for you guys for this evening. Yeah, so if this way of trading actually interests you all, I still do think that London breakout has a chance of working out. It's just that probably my management doesn't really fit it. You'll have to refine on your own side. Yeah, so that would be the interesting to do. All right, so with that, I'll see you 2 weeks later, and take care. Goodbye.